it's Tim Allwood from Compass Property Investing, here today with Gabi from Combined Accounting Plus. Now, a good investment property company will always introduce their clients to a very, very good accountant. That becomes essential, particularly as our clients, their portfolio grows, things become a little bit more complicated. But even at an early stage, it's important to have someone that actually double checks what they do and make sure that they do a lot of proper planning to minimise tax and to create wealth. And with that in mind, Gabi, where should people look towards their wealth creation and retirement planning? What's a good strategy for that?
Well, I think that you're never too young. You know, people go, oh, I'm only in my 20s, I'm not going to retire till I'm 60. Well, as we know now, we're getting older, I'll probably still be working till I'm 80. And that's okay because I love my job. But I think a 20-year-old should still start planning now. And it's the old money in, money out. If you're spending more than what you're earning, you haven't got a very good strategy. You need to get some systems in place. You need to have a bit of a budgetary practice so that you know if you only earn $500 a week, whether you're on an apprenticeship wages or whether you earn $5,000 a week, you need to be saving some, you need to be putting it aside however it is, whether it's in your super, whether you've talked to a financial investment planner and you go down other options. You just need to have some systems and some strategies in place.
That's right. Good advice. Don't spend more than you earn and you're halfway home.
It's not rocket science. They come in here, I only get $400 a week. Well, I live at home with mum and I only pay $80 a week board, so that's $320 left over. What do you do with that? Oh, I spend it on a Friday night. You go, well, come Saturday morning, head and hands all sorry and sad. It's not the way to go.
We always need a reality check, so that's sound advice. Okay, Gabi, so let's cut to the chase. How can clients minimise tax? That's what everyone wants to know.
Well, I think probably the biggest thing is the timing issue. It's no use coming to me on the 1st of July or the 29th of June saying, oh, this has happened this year, I had a bumper year, I've got this huge problem, haven't I? And I go, well, if only you'd have come to see me at the end of March. We like to do, for business clients, we like to do our tax planning, say 9 months into the year, so that there's time for the client to do what needs to be done to minimise their taxation issue. And if needs nothing to be done, nothing needs to be done, at least they know. So I try and get out, or they come in to me, probably by the end of March. If you're an individual, same theory applies. You just need to reevaluate where you are and possibly talk to your accountant, before the year end, giving yourself time, if he suggests whatever he suggests, he or she, that you've got time to actually implement it. Because a lot of times the common catch cry is, oh, I would have put money into super safe, but I didn't have the cash flow. And I'm like, well, if you had forewarning, you could probably gear yourself up.
The horse is bolted if you don't get in too early. So that's fantastic advice. Any other tips or strategies people might be looking at for their minimising or reducing?
There is a lot out there. We're saying tax minimisation strategies. It's just strategies to implement the best streamlining of your financial situation.
And everyone's situation is different, obviously, so it does require pre-planning, get in early and have a chat.
And take advice from someone that knows, not just wing it or talk to Jack at the pub and say, oh yeah, or the taxi driver or the Uber driver said this, that and the other. You really need to talk to someone that knows. Take all your papers, have all your paperwork in order and go and get some advice.
So Gabi, what would be the top 3 tips to minimise tax this year?
Well, probably number 1 would be contributing to your superannuation, because it's a win-win. You're not only minimising your tax, but you're also planning for your future. Number 2 would be to prepay, say if you've got an investment property, prepay your interest, because you can prepay 12 months and that's deductible. Any expenses that are going to be due for payment in July. If they're going to be due for payment in July, pay them in June, because otherwise you're waiting another 13 months to get that deduction. So, and that includes, and make sure that your superannuation for your employees, if you're in that sort of a situation, your SGC is paid in the super fund by the 30th of June. That is a no-brainer, that one, because otherwise it's not due till the 28th of July, but if you haven't paid it by 30th of June, it's not deductible to you in that financial year, which is the following year. So that would be the first 3.
Very good.
Plenty more after that, but that would be the first.
Gabby, I hear it every now and then from a new client, ones that worry a bit. They sort of say, will they ever take away tax deductibility from an investment property? What's your take on that?
Well, I didn't polish my crystal ball this morning, but I am of the belief after many years that the powers that be that would make the legislation that there would be no tax deductibility for negative gearing, I cannot believe that would ever come into being. There's too many people in a higher chair in the country than us that would never allow that to come, being that they're probably the ones that hold the majority of the negative gearing properties. And also in Australia we don't have a lot of government provided housing commission. I mean, there is housing commission, but the government relies on the private sector a great deal to provide that housing accommodation for those that need it under the housing commission or special. So the likelihood of negative gearing being taken away or tax deductibility, I find very...
And that's why you see a lot of first home buyer grants or building boosts around the country, because building of houses stimulates the economy in so many different levels.
Yeah, that's for sure. All the housing schemes are geared up to that, because there's not enough out there.
Just don't do, when it comes to investing in property, that they should do.
Oh, so many just do not even, they've never even heard of it. I had a client in recently. He's got 7 investment properties, held them for many years, and I'm going through it. He wasn't a client, he came from another firm. And I said to him, you don't have a quantity survey on any of these properties. And he was like, huh? What's a quantity? I said, and explained it all to him, and the tax effect and the roll down and, the end result. Amazing. So out he went, and he got one done for each of the 7 properties, made a huge difference to his tax refund.
Yeah. Now, a quantity surveyor does up a depreciation schedule, so that's what you're referring to, a quantity surveyor. Yeah, and then the quantity surveyor does the tax depreciation and brings that to the accountant. So that's, you're right. I think there's a stat about 80% of investors don't do it.
No, it's a really high. To not have heard of it, I was like, I mean, he was an astute investor.
We see it all the time.
Yeah. And then they go, will it make any difference? And I go, well, I can give you the before and after.
Yeah.
And here's the before and here's the after.
So if you're surrounded by professionals, you won't forget that, because you will be reminded very easily.
Yeah. Because they, what is it again? I'll get a lot. What was that called again? Like I say, well, it's the quantity survey, how that does the tax depreciation.
Yeah, so it's a lot of big words there. It's probably why people forget it easily. Yeah. Gabby, to close off today, thanks for your time, but tell us, what's the single biggest tip that you can give anyone watching today?
I would say you're not going to know the questions to ask. You need to go and talk to a professional, talk to your accountant. We always give the first hour free, and we're happy to talk to you about whatever the issue is. We're happy to be the referee, the guidance counsellor, just to listen to what your problems or worries might be and to steer you in the right direction. Because if you don't ask the question, you'll never know the answer. And if you think you're not big enough to talk to an accountant, individual returns, mum, dad, family, companies, super funds, we deal with all of that, and we're happy to talk to you. And I think that's the thing. You need to put your hand up and ask for some help.
Absolutely, and from a very down-to-earth person like Gabby and her team, couldn't recommend them any more highly. So well done.
Thanks
for your time.
Thanks to you.